Welcome to the Dream Huge podcast, where we'll talk with real estate investors, entrepreneurs, business leaders, athletes, and more to inspire you with their success stories so you can work hard, never give up, and dream huge. And now, let's start the show.
Yo, what is up, everybody? Welcome to the Dream Huge podcast, man. We love to share success stories from other huge dreamers, folks in the real estate business, entrepreneurs, movers, shakers, influencers, and more. And hopefully these stories will help to motivate and inspire you to also dream huge, baby. And today we have our very special co-host, JP43, John Pavlansky. What is up, JP?
What is going on, Pete? I am excited for our episode today. We're going to be talking some real estate today. Not that we always talk about real estate. We talk with athletes. We talk with influencers. We talk with other entrepreneurs. And I am just excited to talk about our specialty, some real estate today. I am doing absolutely fantastic, Pete. I have one single question, though. How are you doing, my man?
I'm doing fantastic as well. Thank you for asking. And I'm excited about this one too. And I'm glad I'm ready. I've got the extra big, extra long Post-it notes today. You know what I'm talking about, JP?
I sure do. Those are the best ones. See, look, I got these little guys. Not enough, man. Not enough space.
You're going to need one of these for today's show. Here at Dream Huge, we specialize in real estate investing. And we happen to have Sohin Shah on the podcast today. Sohin is with InstaLend. You can check them out online at instalend.com. And he happened to say pre-show that they fund, and he's going to get into it, but they fund BRRRRs, they fund fix and flips, they fund all types of real estate. And their number one state they fund in is, guess where?
Ohio.
Ohio, baby. Yes. So how awesome is that? And I said, dude, I got two people to send you right now. So I think if people do listen to the show or watch the show, they're going to be rewarded with some good stuff today. So thank you, Sohin, for jumping on here today. Sohin, let's start from the top. Who are you and what do you do at InstaLend?
Great. So I'm one of the co-founders of InstaLend. We're a private lender for residential real estate. We lend nationwide. And what we lend on is an investment properties. If you or anyone you know is looking to acquire property, fix it up and sell it, you probably won't qualify for a loan from the bank. So you look to work with a private lender or a hard money lender. That's where we come in. We can streamline the entire financing process for you and close in as little as 10 days. All we need is an appraisal on the property. And we don't need tax returns or W-2s, none of that. For us, the collateral is the property. We lend on what's known as distressed properties through a fix and flip loan product. But once you finish the work, if you want to hold on to the asset as a rental, be a landlord yourself, you can always refinance into a DSCR rental loan. That's another loan product we have. We have ground up construction loans as well if you're looking to build something from scratch. And then we also have multifamily loans for up to 9 units. That's for the bigger properties.
And you know what? InstaLend and Sohin, they have the rates right on the homepage and the website. So go on there and check those out. Why don't we talk about the rates since I brought that up?
Yeah. So rates have just dropped. Fix and flip starts around 10.5%. It's a 12-month loan. Interest only, no prepayment penalty. So you can pay off as soon as you're done. And then the DSCR rental loan, which is a landlord loan, it's a 30-year mortgage. The rates start around 6.5% for that.
Excellent.
Wow.
Yeah.
Wow.
That's fixed rate.
The actual process. So you said all I need is an appraisal to get started. So I contact the appraiser of my choice?
Well, ideally, the lender places the appraisal order, but we work with local appraisers. If there's good appraisers that you're aware of, feel free to connect us. We'll do a background check. We'll screen them. We can build an appraisal panel for clients as well. But eventually, we have to make sure it's compliant.
Well, I'm sitting here writing my notes down already. I think there's a lot to unpack there from my perspective already. And I wish we had you on the podcast about 20 days sooner because you might be my lender on the deal that I'm buying right now.
The next one.
Yeah.
Based on some of those numbers. But yeah, no, definitely going to be buying more. So first thing I want to break down out of what you said so far, Sohin, is for the viewers out there, not everybody knows. You said, okay, I go to my local bank. They say, hey, you cannot get approved for a loan yet. But I know it's a great cash flowing property and I need to get a loan. You said hard money and private money are typically the next steps. Can you tell us the difference between those two and then where you fit in between the two of them?
Absolutely. Hard money is basically, a company that's lending out the way we do. It's been called hard money because the interest rates are astronomical, like 15% or 16% for 1 year. And then private money is just a high net worth individual, could be someone's uncle who's rich. He'll make a one-off loan, but he's not a consistent source of capital. He does not have enough to lend for 100 deals maybe, or 1,000 deals. So that's private money. And hard money, where we come in as private lenders, are we've institutionalized the entire process. We close within 10 days. And as long as you fit the credit profile, the property appraises correctly, we are going to make a loan. Our rates are pretty competitive as well. And so that's the industry we operate in. We're trying to make sure our rates are consistent nationwide and they don't fluctuate based on who we're talking to.
Beautiful. Beautiful. I think it gives a good explanation of that. In 10 days, that is a quick close, even with an appraisal. So is this an actual official appraisal, or is it more or less walk through, want to get the ARV, make sure from your guys' perspective, it's going to be a good investment from your side of things?
It's an actual appraisal. It has three values for a fix and flip. The as-is value, which is the value of the property in its current distressed condition. The ARV, which is the after renovation value, which means the value of the property once you finish fixing it up. And then there's a market rent schedule, which is important because many a times investors would fix up a property, but by the time they're done, the market conditions have changed, the season has changed. It's not the best time to list it for sale. So it might make sense to rent it out. And you want to know going in what your strategy could be. And so the appraisal will have a market rent schedule, which a savvy investor can use to underwrite the exit and have a second exit strategy. Instead of sale, they could probably refinance and hold on to the property as rent.
Beautiful. Beautiful stuff.
And in our experience, we've noticed the good investors are the ones who are flexible on their exit strategy. And so the nature of capital backing them is also intelligent to recognize that, hey, situations happen, things happen, right? Let's underwrite a deal from all scenarios and make sure we are positioning our capital to encourage our investors to succeed. That's the biggest difference between hard money and a private lender. Paul, a hard money lender might want you to fail because that's when they can tap into the equity on the property. But that works for one or two deals, right? When you're doing this at scale, a lender with thousands or tens of thousands of properties, the more foreclosures you have, the more challenging it is to deal with paperwork. So that's not the business we're in.
Got it. Now, and you said, is all your guys' money in-house, or are you pulling from other investors as well?
We have institutional capital that we tap into. So this is just money from Wall Street. Yeah.
What if a viewer wants to set up their own type of InstaLend program? What type of advice would you give them for that?
We typically see a lot of those folks come to us and work with us in a broker capacity. So they have their own branding, etc. They're the face of the relationship with a borrower or a client. They do a lot of the document aggregation. And then they get paid on the closing statement, the same time that we get paid. So nothing really changes. They end up being the face of the relationship. We are the back office and processing team for them in this relationship. What they tell us is, hey, I have a client, here's the property address, these are the numbers, what's the loan looking like? I'll give them the loan terms, they'll run with it. I'll let them know what documents I need. And once we have the documents, we'll approve the loan and then we can go to close.
I love it. Now, are you guys brokering out? Say I reach out to you directly, Sohin. Are you brokering that out to other lenders, to other servicing companies?
No, this is our own capital.
Gotcha. Okay. That's beautiful stuff. And I was going to ask, that was going to be my question too, Pete, on that. How did you get started in this? Were you investing in real estate prior to, and then you got into the lending side? Were you always in the lending side? Kind of where did this come about, and with you and your other co-founders?
Yeah, so look, I was investing in real estate myself. I had a good job on Wall Street as an investment banker. So I had a lot of disposable wealth I was sitting on, and I came across a few distressed investment opportunities in real estate. Felt the returns were pretty high if I could fix up the property. The mistake I made was I went in all cash, and so I did one deal, did it well, took me 12 months. But in the same time frame, I had about a dozen other good distressed properties that came my way. I said no to all of them because I had put all my money in the first deal. And that got me thinking about leverage. If I had access to capital where I could tap into the other 12 deals that I missed out on as well. I could have amplified my return quite a lot more. My crew could have rotated between 12 properties as opposed to just working on one property. And so economies of scale would have come in as well. So that really got me interested in figuring out how the capital source could be made more streamlined and efficient. I started talking to a few private lenders or hard money lenders, and I realized that terms changed. They were very flaky depending on who they were talking to. And so there seemed to be an opportunity to streamline this, take it nationwide as well, and work with other investors because I think we're just getting started. There's so many properties out there that still need to be fixed up. There's a shortage of housing in this country. Rents are going pretty high right now, so being a landlord is a great opportunity as well. So I think there's still a lot to be done.
Can you say that again? Can you say the last part again? There's a shortage in housing. There's a lot of properties that are distressed that need to be remodeled.
Yep.
And rents
Yeah,
are
and
high, so it's great to be a landlord.
absolutely. And if you look at why properties get distressed, which is another study we've done on our end, but I just don't know if it's appropriate to share on this call. I think that's always going to be the case, just given the number of divorces and split ups that you see amongst marriages, etc. It leads to assets which have to be divided, and a lot of the times that makes a very good buying opportunity for a savvy investor. Secondly, the high leverage utilization on the personal side can lead to someone not keeping up with the mortgages. And then they're forced to list it on the market for below market value, which gives a great opportunity for a savvy investor to step in and say, hey, I'll do right by you. But I also see a financial incentive here for me to make a bit of profit as well. And so this seems to be an industry which is just getting started, and there seems to be a lot of potential in it.
Beautiful.
Sohin, where in Ohio do you lend?
We do a lot of business in Dayton, Cleveland, Columbus.
And why do you find Ohio to be a sweet spot?
I think Ohio is one of the best spots to invest. Number one, on the distress side, you get access to properties which you can buy even on Zillow, anywhere between 20,000 to 100,000, depending on the kind of renovation work you are interested in doing. You can get a gut rehab for which is very distressed property for $20,000. Or if you want to do a light rehab, you can probably get it for $50, $60, $80,000. Secondly, Ohio is one of the few pockets nationwide where you can get access to a four-family, a quadruplex, for less than $200,000. And the rental yields on these babies are incredible because each one rents out for anywhere from $850 to $1,200. You do the math, it easily beats the 1% rule for being a landlord. The Section 8 program in Ohio is also pretty strong. And so we see a lot of certainty in revenue for the landlords because you're getting paid by the government, right? A portion or all of the portion of the rent checks is coming through Section 8 in that property. And so that leads to great certainty for the owner in terms of the cash flow that they can expect. And when the owner gets their cash flow, they're able to make the interest payment on our loan. So it makes our loan a lot more secure as well.
Yeah, Ohio provides a win-win. It's a win for the investors because it provides cash flow. It's a win for the tenants because with that cash flow, the good investors, they reinvest into the properties as well and provide much needed housing for the communities. What you mentioned the 1% rule. If you jump into that a little bit, what does that mean?
Typically, any investor who's buying a rental property, which means a property where you do not want to do any fixing up, you just want to buy it, rent it out to a tenant, and be a landlord. The rule of thumb is the monthly rent should be 1% of the purchase price. So if you're buying a property for $100,000, you want to make sure you're earning $1,000 in monthly rent. That's the 1% rule. Ohio beats that. Like I said, Ohio will probably give you 1250 instead of 1,000.
Right.
And you can
want
buy
that
a four
1%
family
at a minimum.
and a
You
minimum.
want that at a minimum, you're saying it ensures that the property will cash flow.
It'll ensure the property will cash flow after taking into account contingencies as well. And that's what you want to do. Many investors who don't do a good job never factor in for contingencies, but life happens.
Mm-hmm.
And so if you want to make sure you're successful, you make your money on the buy, you make sure there's enough buffer for any unforeseen events as well.
Sure.
That's what
Yeah.
the
I should
1%.
rephrase that. It doesn't necessarily ensure that it cash flows at 1%, but that 1% is an indicator for you to dive in deeper and look at the actual cash flow and maybe anticipate some of those uncertainties.
Correct.
Yeah. Now, speaking of those uncertainties, because I definitely have ran numbers with plenty of new investors on the agency side, ran numbers myself on countless numbers of properties as well. And I think one thing that a lot of people don't consider is some of those uncertainties, right? They say, okay, I'm going to get $1,000 in rent. My mortgage is going to be $600. I'm going to make $400 a month. It's not necessarily the truth, right? What do you suggest, Sohin, or what do you, when you're underwriting properties, what do you typically take out for those unforeseen things?
As a lender, we look at a metric called debt service coverage ratio, DSCR, which is basically, here's your monthly rent, that's your income, and then you have expenses, which you either pay on a monthly basis or, in one lump sum on an annual basis, like your property taxes, property insurance. If there's HOA, then you'll pay those fees. If the property is in a flood zone, then you'll have flood insurance as well. Things of that nature.
Mm-hmm.
If you are using a property manager to maintain the property, then you probably also want to factor the 8 or 10% property management fee into your math. So after subtracting all these expenses, do you still have some residual income coming to you? If the answer is yes, that's a great investment. Because now what's happening is the tenant's rent check is paying your mortgage. Each month, this mortgage is paid down a little bit in principal as well. So you end up owning a greater percentage of equity in your property. Hold it for 5, 10, 15 years, and then that equity slice is pretty substantial. Separately, just to go off track, but savvy investors also consider the depreciation benefits from real estate, which is non-quantified in this example. And I think since there is residual income coming to you, that would further increase the IRR as well. So as a lender, we look at some of these metrics, but as a landlord or an owner, there's so many ways you can slice the pie.
Absolutely.
Hey, Sohin, how much money do I need to put down for the various products?
For a fix and flip loan, if you're a first timer, you'll probably put down 30%. If you're experienced, you'll put down 10%. So that ranges on experience. For a DSCR rental, we don't care about experience. You're putting down 20% in most cases, unless the property is not cash flowing. Then you'd probably put in a little more.
For the 10% on the fix and flip, so what's the experience requirements?
5 completed flips in the last 3 or 4 years. Or, you could also be a licensed GC or a licensed realtor, which can count as, experience score of 1 completed deal.
Okay. So even though I haven't done any flips necessarily, but I've done hundreds of deals as an agent, I could be considered experienced.
Well, then your experience score would not be exactly 5 deals, but you'd probably be, somewhere in between.
Gotcha.
I'd underwrite that and let you know where you'd land.
In other words, are you going to let JP buy with 10% down today? Yes or no? I'm just teasing. We're not going to put you on the spot. I see where JP's getting at, though. He's like, man, what can I get in here for?
I'm just thinking, right?
You got to. No, it's a great deal. It sounds like a great program.
Yeah. Well, and that was going to be my next question, too. From there, do you guys fund the whole flip, correct? Right?
So we fund 100% of the construction work that you're going to undertake. And just to go back to your previous comment, if you are looking for higher leverage, it always makes sense to partner with someone who has more experience than you. Bring them on as a co-signer if need be, because then I'm going to underwrite their credit and experience, and you can piggyback off that and get a lower down payment.
So if you fund the renovations as well, is that done all up front or in draws, or what does that look like?
It's done in draws. What that means is, as the property owner, you will start fixing it up using your own money. And once you finish some amount, which is up to you, you can say, hey, I've finished demo, I've finished dumpsters, reimburse me for those line items. We'll just ask you to take photos. You can use a mobile app for that. Send us photos. We see the work is completed. You'll get a wire in 24 business hours.
That's amazing. That's amazing stuff. And I'm just writing down notes too for the investor side of things too, to get this out to some of my guys, because every hard money lender's got just a little bit different on every side of things. So this is awesome. Construction loans. We are in a market right now, in our market, where people are building like crazy and everybody is wanting to build. All my investors are coming to me and saying, how can I build? How can I build? How can I build? Even Pete dove in and built one for himself this year to sell. So tell us a little bit about that. How many people you have doing that, if that's a pretty lucrative product for most people, and tell us how the funding, the draws, et cetera, work on a construction loan as well.
Great question. So we've seen a lot of demand, like you rightly said, in the last 3 to 6 months on the new construction loan product. And that's also because I think the sale price for a lot of the existing properties out there, even though they're distressed, given the amount of bidding that's going on, has been driven up. So people prefer just building from the ground up, where you can control the pricing and also the outcome of how the product should look. The process is the same as the fix and flip loan that I mentioned before. The only additional queries we'd ask is, do you have stamped and approved permits? Do you have any plans? If you do, that gives you higher leverage. If not, that's fine as well. It'll just eat into your leverage. And what is leverage looking like for new construction? It's a little different. If you're buying or if you're asking us to refinance on a piece of land which is not permitted, no stamped permits, I'll probably give you 50% of the value of the land. But I'll also give you 100% of the construction costs. If there's stamped and approved permits in place, then you get 65% of the purchase price and 100% of the construction cost.
Got it. Now, with that being said, too, how high will you go on the construction loan side of things in terms of a price point?
Typically, it's $2 million, but we've done bigger loans as well. So on a case-by-case basis, we make exceptions.
Yeah. So say me and Pete have a 20-acre lot. We want to put 40 houses out here on half-acre lots. That's something that you guys be able to do?
Absolutely. The 2 million cap is per property, not per project.
Okay.
Let's get those stamps, baby.
Let's do it.
We need to get those permits and get those stamps. What's the hold up?
What are the rates on that loan right now?
It's 11 and a quarter.
Has to be a killer deal then. Okay.
Great stuff. All right, we're up over 20 minutes already. Sohin Shah with InstaLend.com. JP, closing thoughts.
Yeah, no, I was going to ask too, just aside from the lending side of things, are you still actively investing yourself as well?
Yeah, I've been looking at Ohio. I've been looking at Syracuse in New York, just for my personal portfolio.
Mhm.
2 markets that I am personally considering right now.
Gotcha. Okay. Well, I might have some opportunities for you then. I already got the number, so I may have sent some stuff over to you. Now, what does your portfolio look like, if I can ask, Sohin?
Right now, it's mostly cash flowing assets.
Mm-hmm.
Yeah, because I think to be a good operator on the construction side, it's important that you carve out time to visit the property when things happen, and things will happen, which won't be in your control. And if you don't have the bandwidth for that, it's better to be a passive investor where you're making rental income.
Where do you live, Sohin?
New Jersey, and our office is in New York.
Okay. All right. And how many doors do you have yourself, and where are they at?
Most of the doors we have are across Ohio, New Jersey, a lot in Illinois, and Detroit as well, Michigan. And now we're starting to look more actively at North Carolina as well.
Gotcha. Heck yeah. Well,
Perfect.
absolutely loads of information here from the lending side of things, guys. If you are a listener right now and you are looking to get, whether it's into fix and flips, you're looking to get into rental properties, and you have the deal, but you don't have the money, this guy is who you need to talk to. So absolutely awesome pod so far. Pete, do you got any final thoughts, my man?
No, I think, I'm definitely going to send your name out today as soon as we get off here. And I think you can definitely help some people out. Hey, it all comes down to that, man. The more people you help, the more successful you will be. You want to make more money, you simply got to help more people. And Sohin is doing that. He took an awesome concept and that figured, how can I scale this nationwide? And it sounds like he's done a great job doing that. So we're going to help you spread the word as well, Sohin. So Sohin, any final thoughts from you before we close this out?
No, I appreciate you having me here. And if there's anyone I can help, I'll be on standby.
My man.
Love it, man. Sohin Shah with InstaLend. Check them out online, InstaLend.com. Thank you, everyone. Thank you, Sohin. Thank you, JP. Thank you for watching and listening to the Dream Huge podcast. And as always, remember the rules. Work hard. Never give up. And dream huge, baby. Let's see the guns, Sohin. Let's see them. There you go. My man. All right, y'all. Have a great day. We'll see ya.
Thank you for listening to the Dream Huge podcast. Make sure you subscribe so you don't miss any future episodes. For more inspiring content, follow us on Instagram and Facebook at Dream Huge Realty and on TikTok at Dream Huge Inc. Until next time.